Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, welcome. Thanks everyone for joining. We're going to get started in a couple minutes here. We're 1 hour away from the futures market open up, and we'll analyze the markets real quick, and we'll go over top down on gold, and we'll see how the market opens up. Okay, let's all trade safe, proper risk management. Let's have a good Monday.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey, welcome everyone. Thanks everyone for joining. Good evening. It is almost 7 p.m. Eastern. It's a new month, new week. It's Monday, March the 2nd. So thanks everyone for joining. What we're going to do is we're going to get into gold. But before we get there, we're going to just go over the markets really quick. I know that you guys have probably already done this. Prepared yourself for the news this week. Maybe went over your earnings, and then we'll get into it, and then we'll start dissecting gold. There was a big move it made right at the day opened at 6 p.m. It retraced down to about the point of control, and it's testing again today's highs. Okay, so hope everyone had a great weekend, and let's get into this. So first things first is Forex Factory. Today's news was busy. You can see a lot of low impact news coming out of Europe. We moved into 10 a.m. ISM manufacturing, came in better than expected. So good actual numbers with ISM. President Trump spoke in the morning at 11 a.m. And we have a lot of ongoing things going on around the world in the Middle East. That is developing as we're speaking minute by minute. So we are trading gold. So it could be very volatile for the next little bit. So please use proper risk management when we're trading this. Okay. Going into tomorrow's news, Tuesday, There is a UK annual budget release at 7:30 a.m. Eastern, high impact. When we move into the North American markets, not much going on. Wednesday, midweek, we have our ADP non-farm employment change. So when I see this, I know that it's NFP week, and the first Friday of every single month. So March 6th, Friday, is going to be NFP. Will be coming out. Also Wednesday, 10 a.m., ISM services, high impact news, and crude oil inventories. Massive move on crude oil over the weekend. $10 move plus on a barrel. So big moves, guys. Anytime, there's war and things like that, it can affect metals and crude oil. Also, if you guys are following the news with crude oil, the Strait of Hormuz, Iran have said that they are not letting any tankers go through there and will launch missiles. And that strait right there affects 20 to 30% of the global supply of oil. So they're basically shutting it down. So we should see crude oil continuing to go up. You might feel it at your gas pump next week coming up. That's how supply and demand works, guys. So if you're trading crude oil, keep an eye on the inventories this week. Those are week over week inventories. Also, our unemployment claims Thursday morning, U.S. unemployment claims. And then finally, to end off the week, big week, you can see that there's a lot of red folders in the U.S. 8:30 a.m. average hourly earnings, core retail sales, non-farm employment change, retail sales month over month, and our unemployment rate. So it is NFP this Friday, so please trade careful, okay? Earnings wise, let's just go through this really quickly. Tomorrow morning we have Target, we've got Best Buy. I'm just going to go over just some top names that maybe you guys are familiar with. Tuesday after close, CrowdStrike. Continuing to move into, I don't see like any big names. Abercrombie and Fitch has earnings. No, it's no big name really. Broadcom is a big name. Wednesday after close, this is a Dow 30 security, S&P 500 security. Rigetti Computing, these are quantum computing securities over here. They are very volatile. These quantum computing securities. There's RGTI, there's QCOM, QCOM, just to name a few. We move into Thursday of this NFP week, Thursday pre-market, Sienna Corporation, and no big names. Like you remember, we had NVIDIA last week. Those are big names. We have one to finish off Thursday after hours. Costco Wholesale will be reporting. Again, it's a Dow Jones security over here. S&P 500 security. And then finally, Friday before the open, before we have our NFP, there is some notable names. Okay, so not much going on earnings wise. There's no big tech names. There's no Magnificent Seven. There's no big names, notable names this week. Okay, in the news. Okay, guys. So please, I hope you guys are following your news. S&P 500 was flat today. Dow was red a little bit. Nasdaq was up. VIX volatility it was up today. Volatility index, I've been talking about this. When it's green, markets are traditionally red. When the volatility index is red, markets are traditionally green. Gold had a good day. Crypto is back, hovering around this, fighting at this 70,000. So if Bitcoin can kind of reclaim 75,000, maybe it might have some bulls coming in to push it higher. But if it loses this, it's been consolidating for a month in between this 60 to 70,000. If it loses this support in here, it may revisit the 50s. But that's crypto. News, Trump's Iran war adds potential shock for U.S. economy. That's in the news. Stocks recover from steep losses in early test of Iran fallout. Apple debuts with a $599 iPhone 17. For gas prices likely to rise very quickly as oil surges. So that's what I'm talking about. Overnight, you might see it at your gas pumps. Over here where I am, gas went up 15 cents per liter just overnight. I filled up at 120 yesterday, and this morning when I woke up, it was at 136. So just like that, 15 cents per liter. Supply and demand affects the pumps as well. Okay. What else we got going on? Okay, so lots going on with Iran, with oil, with gold, with war happening. Okay, and just moving forward, guys, our Discord, we sent out a couple signals. This is just a example of one we sent out in the commodities channel. This was on gold, looking for long for buys above 5,300. Here's 5,300. You know, it got a little choppy in there, came back down. But if you notice, it's making higher lows, still pushing up for that new higher high, pulling back at around this 5,300, then finally started to break out for a good 400 pip move. If you stuck with it, you know, sometimes you're going to have to trade through a choppy session. Once in a while, it's not always trending up or trending down. Sometimes we're going to have to learn how to trade sideways. Okay, and also, guys, thanks everyone for joining on Zoom and YouTube. There's a free Telegram channel pinned at the top of YouTube for you guys on YouTube. I highly recommend you join this. Gives you your free YouTube links. Some articles regarding the markets. This is a blog on. We're going to be doing our 5-6 day stock and option bootcamp very soon in April. I'm going to Europe, guys. I'm leaving Wednesday morning. I will be gone for approximately 12 days. And then when I come back, we'll get back in business. And then we're going to do this big boot camp. So if you want to learn about stock and options, I highly recommend you join this boot camp. You'll get a 3-month exclusive membership with us with 3 one-on-ones to help you out, set up a plan, and answer any questions you guys may have. It will be at a good rate for you guys. And I don't have time. Maybe if I have time, I'll go over this options, but I hope you guys are reading these blogs on your own and can learn all about stock and options with calls and puts. Okay. And guys, everything available here, our before and afters of trade signals and setups are all available here, okay? Just continue moving forward, guys. If you want to join the Sniper team, we'd love to have you guys. There's 50% off discounts right now on 3-month, yearly, and lifetime memberships. Just follow this pop-up and it will help you register. Okay, guys? Blogs are all over here. Here's our blogs on stock option trading. We had a blog learning about what is a stock. We had our SST market outlook for our weekly outlook for members. What is a bond? So we're learning about bonds, stocks, options. You can see that we're kind of transitioning in a little bit with some stock and options education to help you guys out. And then the rewards program for all of our snipers that want to get cash back. That's available for you guys, okay? And live sessions this week, okay, it's a reduced schedule. Dave will be doing his thing. Dave will be doing his tomorrow, starting Tuesday, Wednesday, and Thursday, his New York sessions. I'm going to do another Tokyo session tomorrow. I will upload a pre-recorded webinar for you guys, setting realistic expectations. This is continuing the psychology and mindset webinar. I hope you guys watched the one on the weekend. That was on the growth mindset versus a fixed mindset. That was a good one. I hope you guys, it was only 20 minutes, but hopefully you guys tuned in and caught it, okay? And then I will be going to Europe Wednesday morning. I'm gone for approximately, I'll be back Sunday the 15th, I believe, okay? So I'm going to miss a week with you guys, but then I'll be back and then we'll get back to it, okay? And finally, guys, if you guys can leave us a like, subscribe to the channel, we do appreciate it. Your support, it goes a long way and helps us continuing to do this on a daily basis. Okay, guys, so now I know why you guys are here. You guys are not here to just hear my spiel every single day. You guys are here for this. So I am on gold, XAUUSD. This is how it's moving on the 5 minutes. Again, we're going to do a top-down analysis and we're going to bring it down, okay? Everyone on Zoom, thanks for joining. Sergio, welcome. Justin, welcome. Hopefully you guys had a great weekend. SSDN, welcome. Danny, Siobhan, welcome. Thanks, guys. And everyone on YouTube, thanks everyone for joining. Welcome. Game Pro, welcome. Thanks for joining. Avi, J Violet, welcome, guys. Justin King, welcome. Welcome, guys. Shaz, thank you for joining. Welcome. Okay, guys. If you guys are ready, I'm ready. Okay, so if you want to learn how to do a top-down analysis, I'm going to do one. So this is where you can learn. You know, I'm not buying or selling anything right now. I'm doing a top-down analysis. So I'm just giving you a heads up so you don't waste your time asking me, am I buying, am I selling, am I buying, am I selling? Just so we don't just get the chat filled with spam. I'm not buying, I'm not selling right now. I'm doing a top-down analysis, starting from the daily, bringing it down to the hourly. Finally, I'll bring it down to the 5 minutes, and then I will be looking for potential trades. But when when I haven't done a top-down analysis, I have no idea what's going on. So I don't want to just take a trade blindly. I need to set up a few zones, maybe figure out some points of interest, maybe a point of control, so on and so forth. Okay, so this is what we got on the daily. First things first is I want to identify this highest point. This was the all-time high of gold. Will we revisit it? There's a possibility we may revisit it. It's just below 5,600. Are we inching up there? Possibly. When we get up there, is it going to break for a new all-time high? Is it going to be a double top and a drop? Whatever, but we're not there yet. So I like to acknowledge it. I like to place a zone right below it to those bodies, and I make it red because I'm literally colorblind, so I need to see some colors on my chart over here. I like red. Red reminds me that there's sellers. Red reminds me that there's resistance. Red reminds me that there's supply. Okay, so anytime I see red, that's what it reminds me of. Now I want to complement it with some green on the chart to show me where potential big buyers are, support or demand. Okay, so first thing is, from the all-time high, that was the most recent low. Notice the numbers are very psychological numbers, 5,600, 4,400. You may start to see these numbers repeat themselves, and now you understand now what psychological numbers are. So there's a zone below that yellow line, believe it or not. How do we identify it? Well, just look by the yellow line, look at those bodies right there, carry it forward into the future. You can see how it was resistance. Finally, when those bodies closed above, you guys know volume is the only thing that's variable, moves up and down. If it closes above, a zone can become temporary support. Closing above again, it's support. It came right down there, bounced off of it, support. If it ever comes back down there, I might be looking to buy gold at just below 4,400. We're not there yet, okay? So now we're traveling up to this potential all-time high supply zone, okay? Are we moving up? Yes, you can see that we are slowly in another daily uptrend, continuing to push up. If you want to draw a trend line, you're more than welcome. If you just can visually see that we're trending up, you can see that as well. Now, we do have a move. That was the big move to the all-time high. You can see that we've retraced down. Here's about a point of interest of support down here, and we are coming right back up. I'll make it a little thicker so you guys can see it. One moment. And you can see we are now approaching potentially a double top area, but we've got a lot of tension going on around the world. We've got ongoing war in the Middle East, and what does that do to gold? It traditionally makes it more bullish, okay? But we're not there inside. We haven't closed above. We're getting there, okay? So now what I just do is just complement some points of interest on this run that we got moving up. So number one, here's a bottom support, okay? How can I tell that this is a good line to put here? Well, you can see when this big bearish candle came down, it hit the wick there. It didn't close down there. It came all the way back up. It got rejected and closed right there. Look at the next bar. The next daily was a bullish engulfing ignited candle that engulfed all the way up here. And then when it rotated all the way back down, this again opened, was a bearish candle. Look at where it stopped, right at that yellow line. So that's a point of interest holding support at 4655. We do have a resistance above us right here. Okay, you can see when we came up right into that, it pushed right back down. Came in again. You can see rejected, rejected, impulse move, creating that new high, close right at the yellow line. Next day, continue to push down. We built our way back up at this trend line, making higher lows. And then finally, we got a bar Friday, February 20th that closed above. And then we continued ignited to start the new week. Monday, again, there was tension going on in the Mideast that continued to push the move up. And look at the retracements coming all the way back down. So this is a good example of this was resistance in the past. And as soon as you get some blue volume closing above, it can start to flip that resistance into support. It's like a ceiling turning into a floor, okay? Real easy. And you can see that we are continuing. Look at the wicks, higher low, higher low, higher low, higher low, higher low, and continuing to push up with new highs. Okay, now let's just continue to follow, this volume from Friday, Monday, and today. But right here is a good point of interest as well. I'd like to place a yellow line here. Why? Because that was a pivot right there where it moved up on Monday, stopped. Tuesday came all the way back down. We had some consolidation Wednesday, Thursday. Then right at the end of the day, Friday, if you guys remember, gold started really pushing up the last 2-3 hours going into the close, and it closed right at the highest point, and then some tension happened, some missiles went off in the Middle East, and it continued to drive gold all the way up over the weekend. Okay, so if you add short positions on a Friday, this is what can happen, right? So it's very, very tough, very risky if you're trying to short a metal going into, if there's a possible war. Same with crude oil. If you're trying to short crude oil going into this, your account would have been wrecked on Sunday night going into Monday, unless you had long positions. If you were long on gold on Friday, you're laughing right now. You're in the money. Really good. If you had crude oil buys, or you had some oil call options going into Friday in the weekend, you did fantastic. But there's also traders that take the other end, and they got their accounts ruined. Okay, so, and then ask yourself, do you want to hold positions over the weekend, right? Or do you want to sleep good on the weekend and join back up on Monday? Okay, now let's see what happened here. Okay, so Friday, very strong move. Let's figure out where we closed on Friday, where we opened yesterday. Now I'm starting to do, you can see I'm moving into the individual days. So I'm really figuring out Monday right here. We opened, I'm going to round it up to 52.75. There was a brief pullback, didn't last long. You can see how small the wick is, continuing to come right up and pop the wick. And there was the big Monday with all of the news regarding Iran, and we got up to 5,418 and 75 cents. So right now, look at where we're trading. We impulsively came right up to the red all-time high supply zone. But you see right there, see the body on January 28 and the body close. That impulse move that took us to the all-time high came back down and closed. Look at it right there. There's a body close, a body open. So you see how that yellow line, that point of interest where those bodies are, see how it was yesterday's resistance, okay? And then there was sellers there in that red zone at that point of interest. They are there, they offered, they pushed it down, but gold still closed with some bullish volume. Okay, it got rejected. It's a rather big rejection, but they're still holding some bullish volume. Now, where did we close? That's the closing price yesterday. And look at our bullish ignited daily open right now. So at 6 p.m., you guys probably saw it was a big bullish 5-minute candle that opened ignited with no pullback, and it wasn't black at all. Okay, so it's holding strong, ignited daily open. That's our lowest point. So I'm going to change it from yellow to purple. Purple always lets me know it's the daily low or the daily high. This, in fact, is today's daily low. It is a ignited bullish open. Okay, so it's holding right now. Okay, and you see it's very bullish. So today's body has a job to do. Like I always say, its job to do is to continue to backfill yesterday's big wick. But, you know, offers could be coming down lower, where to the bottom of this red zone, 5,380, maybe back up to this. Maybe gold can continue to fill that wick and break out further, right? If it does, yellow line and the all-time high, maybe I just cut it in half just to test if there's some offers right at the halfway point, right there, right at 5,500. Okay, that nice psychological number, 5,500. However, if we start getting rejected, and then we start seeing a wick coming down, and we come back down to the opening ignited price, if it does break, okay, it could flip and turn bearish. We've seen that before on daily candles on these live calls. If it flips bearish, then sellers might have momentum to push it down, push it down, push it down. It might not come all the way down to Monday's opening price. What I would do is I would cut the yesterday's volume in half. Right there, real quick. You see, I'm not even using my Fibonacci tool. I'm just cutting the lines in half. From the yellow to the purple, that's halfway point. I look at the number 5297, right around that 5,300 psychological number. So if it comes down bearish and turns into a shooting star, maybe it stops right there, catches a wick, has some pending buyers waiting there, picks up those orders, and then comes right back up and attempts the opening price to continue to fill. If we lose this 5,300 yellow line, then it's got a high probability we'll come back and test Monday's opening weekly price. If it goes bearish, it's looking to fill Monday's wick and continue push down to this yellow line. Okay, but right now it's still very bullish. Okay, now I go more outlook to see what's going on. So we're slowly coming up with this move higher high, higher low, higher high, higher low, and we're right back into here, causing that wave. But you see, we're trading into the red all-time high supply zone. Okay, that has a potential for a double top. Okay, where one top is right there, this overall is the bottom, the support, and we're coming right back up. So when I say like a double top anywhere in here, could be a double top and they drop it. It might not be gold just crashing, right? It could be a corrective phase coming right back down there and then getting some more buyers in order to take it through this zone and then get to a new all-time high. This move could traditionally just continue fill and rip right through here for a new all-time high, but we still have levels to get up to determine that. Okay, now what I do with the daily candle is I start to break it down, start to dissect it into either 4-hour candles or hourly. You notice if I just do hourly, it's only going to break today's daily candle by 2 or 3 bars because it just opened up at 6 p.m. But it will still give me some evidence of what happened on the start of Monday, maybe a little bit of Friday. So I go from daily, I can go into the 4-hour. I like going right into the hour, and then I can start to see. So I see this big bullish bar right here. It was Sunday, 6 p.m. Okay, you see after the weekend, that was that big gap up, big bullish candle right out of the gate. If you didn't buy the highest point, look, it corrected itself where? Into the bullish point of control. I had a buy waiting in here. As soon as I saw 6 p.m. open and close, I cut it in half. I figured my point of control. How did I do it? The same way I do everything on a daily, on a 4-hour, hourly, 5 minutes, is I get my Fibonacci tool. There's the opening price, the closing price. With hourly, I use white line. There's my halfway, cut in half, white line, right? And then my point of control is the 618382 right there. Guys, how many of you guys did this on Sunday night? I did, okay? And I got some good pips out of there. You know, like I didn't catch the big move, okay? I wasn't holding a position over the weekend. I was waiting. I saw it open. It didn't break, fill that wick to continue to move up. Big bearish candle come down, closed right there. Next one again, ignited. Came all the way down through there, closed right in there, came back, built, higher low, closed. Right here, this candle, 10 p.m. Buy, stop loss below the zone, and took it right up to there, okay? If you guys didn't, it's no worries, right? But at least learn how to do this. That was a big body candle. If I stretch this bullish zone into the future, see right there where it closed below, it continued to push down, but then notice how it came right back into the zone right there. And our hourly candle that just opened closed above, and now we're still pushing up. So I'm going to keep this zone going across my chart. It's still bullish, right? The only thing that's a variable is the volume. So if the volume currently is above and it comes in here, I'm going to be looking for buys to continue maybe to take it up. If the volume, in fact, comes back down bearish and closes below here, I'm going to flip that green zone red and look for maybe potential sells to continue to fill and push down here, okay? But it's still technically bullish, okay? We are above the hourly point of control. And then also maybe this big hourly candle right here. This was 9 a.m. this morning, Monday morning. Well, like, yes, it's still technically yesterday right here. So it opened, pushed all the way down. You see how it engulfed a lot of bars behind? Okay, that's a structural candle. That's one we should at least cut in half, okay? If you can't guess where to cut in half, grab your Fibonacci tool, open, close. I'm going to place a white line, look at the 0.5. Just to let me know right now it's bullish, right? See the bullish candle? We might come right in and transact right at that white line. I know we're at the halfway point of this big bearish candle on Monday, 9 a.m. Will we close above it and make it momentary support to continue to get up to the red box? Or will it get rejected here to come back down into the green box, okay? I'm not going to do a point of control of this hourly candle because I got the big red box and green box here. It might confuse you guys. So I'm just going to keep it with a white point of interest, okay? So naturally, I can see that we are coming up. See this yellow line? That's where that bullish ignited candle started at Sunday, 6 p.m. See how we broke it today at 11 a.m., came down there, picked up the liquidity. So I'm going to add an alert here for gold at this yellow line. If it does come down here, anytime tonight or tomorrow, I might be looking to add, maybe look for potential buys because it's showing good opening balance on Sunday night, good retest there. So maybe buyers are going to protect this area. So I'm going to add an alert. I know the volume is nowhere near here, but if it comes down there, I might be entertaining a potential buy. Okay. Now let's follow it the last few hours when we just opened. Okay. So there was the close right there, 4 p.m. Here's the open. Bullish ignited hourly candle. This is the daily candle, 6 p.m. Came all the way up and closed right there. And then the next hour, 7 p.m., we open bearish, bearish, bearish. See, it's just above 50%. So when I see it's just above 50%, I know it's at that the 382 or the 618 point of control of that body candle. Okay, we continue to move up, fill the wick, and we're driving right now. Okay, so it is bullish. Okay, if I'm looking to sell this, maybe I wait for it to come in the red zone. Why? Because I see sellers there. I saw sellers there. It could come in there and again push down. However, if we're selling, we're going against this overall trend. So we have to be very careful. Okay, otherwise we wait for pullbacks to look for buys. Okay, now I'm not going to stay on the 1 hour. I'm going to move into the 5 minutes now. Okay, so we can see earlier how it was trading today. Big moves right there, 10:55, 11 a.m. Big drop. That was when Donald Trump was speaking, guys. So always pay attention anytime Donald Trump is on Forex Factory when he's speaking, because you guys literally know that he can talk and move the markets, okay? And it can get very volatile. So here it is, 6 p.m. now. Now we're breaking it down. The 5-minute candle that opened today's daily bar. Very bullish. Okay, did anybody cut this 5-minute candle in half? Why is this one important? Why didn't anyone do this candle? Okay, this one is not important. You see how it just came up and it went right back down. This one engulfed everything. What I mean is it engulfed everything. All of this structure right here, look backwards. All that structure, I'm going to make it neutral so you guys can see. You see how it engulfed everything, okay? Just one bar, one 5-minute bar engulfed all of this structure to the left. So that's a good candle. It's full of volume. It closed very strong. That's a great candle to maybe figure out a point of control as a scalper. Just like I did on the daily and the hourly, I do the same shit on the 5-minute candle. What would I do? This is what I would do. I find halfway point right there. I cut it in half. I'll use a red line thicker so you can see what I'm doing on the short time frames. There it is, cut in half. If I want to draw a point of control, I can draw a point of control on that 5-minute candle, just like I did on the daily and the hourly. This can add for further confluence, okay? So you see that pullback, black, little consolidation, came down there. Did it close down there? No, picked up pending orders and closed. Little inside bar didn't. That's where traditionally it should have broke out and came back up, but sellers continue to push it down. But then buyers came in at 645 right at the bottom. So you see it was trading in that green point of control. We're in the bigger, higher time frame bullish point of control. So it's giving me confluence from a higher time frame and the 5-minute, and we continue to push up, close above. So you see how that 5-minute point of control is still holding. If I see black candles come all the way down and close below it, I might look to short because we're close to breaking the opening balance and dropping. But you see how they are potentially holding it from breaking, okay? I might also look for buys back at this red line. So I see that we're nowhere near 5,333 or 30, but it could come all the way back down. If it does, I want to be ready to maybe potentially entertain a buy there tonight, okay? Now, remember that white line? That white line was that hourly cut, okay? On the hourly right here, this big bar from 9 a.m. this morning, that's where I cut it in half. And then I can see on the 5 minutes, we're kind of just consolidating right now. Maybe we will get up to that white line. I can see volume is thinning out right now. We're about 30 minutes away from the futures market open. But if we're looking to buy, okay, or sell, okay, we can see that there was a double top earlier right there. At that daily point of interest, the 5-minute candles came back down. They came up again right in there. They pushed it down, closed heavy today at 9 a.m., pushed down, retraced right back up. Looked like a double bottom right there, looking to break out, but they couldn't fill those wicks to continue to advance a move. Sellers came in at 11, continued to push it down during Trump's speech, came back up slowly, lower high, came back down, higher low, building, new push to these highs, See, it was having a little difficulty closing above there. It retraced all the way right back down. Then look at where they opened the daily bar. Very strong open, pulled back, still holding the point of control, continuing to make some highs right now, okay? So if we look to buy, we're currently going against this bigger trend right over here the last few hours on Monday. But if we're looking to buy, we're moving up with this trend from earlier 11 a.m. that built. Higher high, higher low, higher high, higher low, and a new higher high, okay? And it could get choppy, but we'll see. Let's see how it continues to move. So I'm on the 5 minutes. I'm gonna add some confluence, some EMAs, okay? Let's just look at that RSI indicator. So we are close, we are above 50, okay? So it's telling me we are in an area of strength. It oscillates between 0 and 70. Anything above 70 is considered to be an overbought situation, and maybe we look to sell, but it could continue to squeeze and drive through there when we're looking for sells. So we have to look for more confirmations to look for sell signals. Anytime it comes down below 30, it's in an oversold situation, and we traditionally look for buys, okay? And then I add an EMA 9. So with this green line, we are above the 9 EMA. So short term, still bullish. I add my EMA 200. We are above the EMA 200, okay? So there was actually a bullish crossover that just occurred just before 7 p.m., before our call, and it's still holding, okay? So gold is technically bearish on the short-term time frames right now, okay? Some of you guys might be in a buy. Some of you guys might be in a sell. I'm not in a position right now. What I like to do is I look at the time. It's 7:30. I also like to look at my spreads. If I look to trade right now, I'm getting a spread of 1.7. That's pretty high for me. 1.5 now. It's fluctuating to 2.73 now. So I don't like trading when I'm getting spreads like this. I like to get my trading when it's less than 1 pip, half a pip. But with today's volatility, it's not easy to get low spreads, okay? Any questions on the analysis? Everyone follow what the lines mean. So anytime I see a yellow line, it's a daily point of interest. When I see a bigger green box, I know it's from a higher time frame. When I see a white line, I know it's from hourly. So it's hourly resistance right now because the volume is below on the 5 minutes. And this is how we're moving right now, okay? We got news over here. I'll go into the commodities Discord with the group. Let's see what's going on in here with the guys. If you guys want to chat it up in the Discord, we can. Okay, and everyone, thank you for joining on YouTube. 250 of you guys. If you guys can leave us a like, subscribe to the channel, I promise you'll learn something. And we appreciate you guys. And you guys know at 8 p.m. in 30 minutes, it's the futures market open, okay? So that's going to get volatile as well. So right now, what I'm looking for is what type of reaction will it have at this hourly point of interest, okay? And more importantly, if it can break above this white line, what type of reaction will it have at the bottom of this red box, okay? Because you can see in the past, it was support right there. It was a little bit of a break, but the volume right there, support again and pushed up. And then you see where it closed below, came up to point of control and pushed down. So the big sell-off occurred right here earlier today at 9 a.m. Okay, and we could be retracing right back up there. So this is just an hourly point of interest. This is more of a real zone up here. Okay, so if it continues to move bullish, I really want to see if the sellers will step in here. If it retraces down, I might be looking to buy at the white line if it breaks above there. But I'm also entertaining buys down at this level. I know we're nowhere near this, but that's where we got to learn patience and discipline. We have to wait for the market to come to us, right? So I'm waiting for it. If it can come all the way back down here, maybe look to buy back up, okay? If that doesn't happen, what's my other option? What if it's continuing to be bullish break above that hourly resistance, use it as support, then get up to there, and then maybe sell off there and then pull back here. Maybe I look to entertain a buy at the hourly and then take it back up. However, if it breaks there, it could be selling back down into the green zone down in there, okay? Oh, sorry, I didn't add the daily bar. Dolika, is it possible to show how to add the daily bar indicator in TradingView? You got to get permission first of all. It's with invite. But once you get the invite, if you go to indicators when you get it, you can add it, and then it should be under your favorites. See right there, SST daily bar indicator. So it's under my favorites, but it's with invite only. But and then once I have it on here, just like any other indicator, SST daily bar, right there, I add it. Okay, so this is on the daily right now. So I can see that this big blue bar is the daily, which just opened up at 6 p.m. So it's basically just showing me this volume here. There was the opening price, very bullish. We just caught a wick right there. I can change this from daily. I can put it into the hourly if I like. Like if I would just want to follow this hourly candle, 4 hour, whatever, you go to the indicator settings. I can change it here. Here I have it set up on the daily. I can bring it down to the hourly now. So this shows me now the 7 p.m. hourly candle, which is about to close in 25 minutes. But there's the opening price right there. Oh, the opening. So it was opening at right there at 7 p.m. And then I can see it was initially bearish when it came down right there, that black candle at 7. And then it found support, came back to the opening price, pushed all the way up. See right there, this previous candle, 730 is my hourly resistance and coming right back down, okay? But it's still holding hourly volume. I'll leave it on the hourly right now, and we can watch the hourly. How do you get the daily bar? It's with a certain plan that you guys have. If you send us an email, our admins or myself or Dave will look into it, and we can help you out. Okay, really easy. I'm going to answer this question. So everyone, please pay attention to this. Creative Content has a question. Can you tell the times? No, sorry. Not that question. The other one. Avi. I have a question. After cutting the candle in half, how do you make the support box look like what your fib settings? Okay, really easy. Okay, so let's just go to fib settings right now. Okay, so let me just show you how to do this. Okay, so this goes for everybody. Okay, let me just go to like a blank chart right here. Okay, fib settings. This is a traditional fib. Okay, see how it's got the 618, 786, 1, 382. This is a traditional fib. Go to your traditional fib settings. Okay, I don't need the 0. I just want the point of control area. So I get rid of the 0. I don't need the 236. I need the 382. So you see how I have 382 checked. I need the 0.5 because that tells me exactly 50% cut. I need the 618, okay? Those are the 3 most important ones, 618, 382, and 0.5. I check off everything else. I don't need the 786. I don't need the 1. I don't need 1.618, okay? Now you see how my fib tool looks right there. So when my 0.5 right there is the cut, and then you see the 618 or 382 above or below, there's the point of control, okay? Very easy. Now, pick any candle to practice. Again, don't just pick like any candle, look for your structural candles, okay? So now when we go back to the charts, if I was doing, let's say for example, let me pick a candle that's we haven't done anything on. Let's say I wanted to do it on this big bullish candle right here. See this big blue one? See how this one closed above all of the structure? This is one I would apply it to. How would I do it? Again, I just set up my fib tool, very easy for the point of control. Opening balance, there's the open, you drag it to the closing price, and there it is. See how it pinpointed everything? I can see exactly half, my 0.5, and my control zone is right there. It's mapped out perfectly, mathematically, and very easy. So what I do with this is I stretch it into the future. And at that red line, I add an alert. If it was to ever come back in there, I want to be alerted to watch. So you see it came, it didn't come in. Again, that was a big bearish move, didn't come in. There it is. Now it actually came in. That's when I would have got alerted. See, it's an impulse break, came back and closed above right there. Closed right up there. Then it opened, still above there, okay? So you still see how it's green? Then it opened, and look, it opened blue. Did it fill that, backfill that wick and continue to drive? No. It came back down bearish. Here's a good example of how I use this, okay? See how it's bearish, bearish, bearish? Now, that bearish candle continued to show me that it closed below. So same point of control. I just flipped the color red now. Why? Because the volume is bearish. Now, if I don't sell that, I wait for it. Look at how it came up. Blue, 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 right at 920, blue, right there, right into the point of control. You see how it inverted, it flipped, and then it got rejected. So there's the rejection, your confirmation. That's when I personally, I know I didn't show you guys how to do this live. I'm just back testing. But if you guys know how I trade, that's exactly what I look for. I look to sell. And in my stop loss, if I want to use a tight stop loss, all I am is just above the point of control. You can see I could have got away with it. Sometimes I give it more room to breathe. I go above the next previous candle. Okay, regardless, it retested, came down. If you took the sell, it's got a short wick. You were in profit right away. You didn't even have to worry about drawdown. And it just pushed down. You can measure the moves to your next zone, right? That's what I always do with my ruler. I'm measuring. There's $20 move, 200 pips right down to there. That's basically a scalper's daily goal on one 5-minute bar by waiting for it with an alert. Once you go down 100 pips, 50 pips, go down to a break even, no capital. And this actually really dropped for 600 pips in 15 minutes. Why? Because there was news and market volatility and Wall Street and all that shit. But that's a good example of how to do that, okay? Some of you guys paid attention to that. We'll learn from that. Some of you guys, it went in one ear, out the other ear, because you guys are just worried about buying and selling and not learning, okay? But there it is. I don't know how else to explain it. Now, I'm going to go back to the candles, okay? So, with that being said, now we all know how to do that. So what we got to do is just be patient to figure out what structural candles we need to apply that to, okay? It's these big body ones, okay? It's the big body ones. You'll visually see them, like they engulf a lot behind, okay? Can we do it on any candle? Yes, you can do it on literally any candle, okay? But you want to pick out the ones that are the most important candles. Let's say this bearish one, okay? You see this bearish one that just happened? I could do it on that bearish one just to show you guys, okay? Just to show you how to apply it on that one. Again, my Fibonacci tool is set up for point of control. Now, the opening of a bearish candle opens up here and it closes right there, okay? But you still see on that black bearish candle, it still shows me exactly where 0.5 is, okay? It can show me where the point of control of that bearish volume is, right there, and I can stretch it into the future. Now, this is live, okay? So this one is not just an example of what happened earlier. This one is live. So for the buyers now, in order to continue to push it up, they have to prove to me that they can close it above here. Close above here, and then I'll make that zone green, and then maybe I'll look to continue to buy and take it back up there. But if the buyers cannot close above this bearish point of control, the sellers could still be in control and continue to take it down into here, okay? So let's watch this now. But is this a structural bar? Like if it closed down here at the lowest point, that's different story. We're having a different conversation because it came all the way down there and it engulfed this blue one, and this big blue one. That one would be a different story. If it closed down here, that one, then I would find the point of control. Then I'd look to be selling that one. This one, it came down bearish, but the buyers brought it way back up and closed it there. So we're carrying momentum into this bar. So I was just doing this one for an example, okay? But if it closed below here, it would have been a much better structural point of control candle, okay? But regardless, let's just see if this one will still hold up, okay? We're learning today. We're going to learn while we look for a trade, okay? And then I see a little bit of, so far, like pattern recognition. I can see the 5 minutes made one big move up there. See, they got rejected right below that hourly, okay? I know it's a point of control, but I didn't mark it on this one, but came up. And now it's coming back down. Maybe we find some support here and then it's ready to come back up. Okay, this is a pattern we recognize. Will it continue fill? Maybe it comes up here and it's like a double top and then it's an M coming down, and then we could look to short gold down, but we have to be very careful because when it comes in this green box, we've got a 200 EMA and then the big zone over here where the big buyers could be waiting to bring gold right back up. Okay, so if I'm a seller and I'm looking to take that sell tonight, I'm not silly to just think that gold is just going to go bearish. When it comes down there, if I'm up 100 pips, I'm doing something because I know I'm trading into a green box. I could either be taking my stop loss, going to a break even, scaling some 80% out. And if it comes deeper in there, I'm up 150, 160 points. That's where I'm not playing games because, you know, you have so much confluence in there. That's where the big buyers are waiting. It could just naturally come down in there, pick up those buyers and shoot right back up. So if I go into a sell, I know I'm counter trading that move. So I got to have counter trading rules, guys. I think some of you guys need to learn counter trading rules, you know, just like this. Even if you sold these bars, it's a nice sell, but you got to understand you're still selling into buyers. So could have been, you could have grabbed some nice pips on a sell, but you still have to acknowledge that if it doesn't break all the way down, it could come right back up. Okay. Just like it is right now. So we're following this blue candle. Okay. What happened at that point of control? Did it get rejected and come down? No, it's now the volume is above. So we'll watch the closing price now. And we're learning today. So if it closes above this red zone, I'm just going to flip the zone to green. And it might be temporary support to continue to take us back up to here. And then we're 15 minutes away from futures market open. And that's when we're going to get some volatility. Okay. So be ready. Okay, so now let's just do this together, guys. Did the blue candle close above that red zone? Yes. Okay. The answer is yes. There's no ifs, ands, or buts. The answer is yes, it did close above there. Now, it just opened bullish again. So opened bullish right away, and it's trying to fill that wick and continue to drive higher. Now you see that we have a little bit of point of interest on the 5 minutes right there. There was a rejection, a body, and a body, big impulse move, and we got a wick and a wick. Okay, so now I figured out where we are consolidating. This is the consolidation zone. Okay, I don't like trading consolidation zones. I try to avoid them at all costs. Okay, I let the buyers and sellers fight it out, and I wait for a better entry. So far the buyers brought it up. I don't see any closing blue volume or filling of that wick. This could come back down and close back below here. I'll flip that zone back to black, red, and maybe sell back down. Right now it's still holding. Okay, is this a good time to buy? Sure. If you like this, you can be buying. Okay, otherwise we can wait and see if this candle will officially close above these bodies. Okay, because if we are taking this, it is an impulse candle, right? There's still 3.5 minutes to go. Okay, that was a short-lived sell right there, and now it's coming right back up. Okay, maybe we'll get a push higher, and then something will develop where the futures market opens up and might get more momentum either to the upside or to the downside. Regardless, I'm going to wait for this body to close. It's still hovering inside this consolidated zone. Will it close above here? Possibility. Will it get rejected like that? It's a possibility. That's why I'm avoid trading this bar. Am I missing out on a buy? Yes. Could I miss out on if I buy and then it gets rejected and starts shooting down? Yes, I'm willing to just sit on the sidelines again. Did I miss out on an entry? Possible. Okay. But there is some of you guys already in a sell. Some of you guys are saying, Ron, I'm holding a sell. What should I do? Okay. So, you know, it's both ways. There are some sellers, there's some buyers. I choose to be on the sidelines. There's nothing wrong with that, okay? Just making it clear. If you're on the sidelines and you're analyzing and you're waiting, there's nothing wrong with that. You just don't have enough information to hit the buy or sell button. See that? Now that's a big serious rejection, okay? So it came up there. It was a nice big blue candle, but if you got caught buying that on impulse, that's why I said I refuse to buy this because it's in that consolidated zone. I will wait for it to officially close, and there's the big rejection. That's a shooting star. Now, this tells me Like this is selling pressure, okay? But it could just come down a little bit, catch a wick, and go back up. You know, if it wants to play those Mickey Mouse games back and forth, barcoding, you guys trade gold just like me. You guys know how annoying it can be. So maybe I'll wait for this candle to officially close. I see it faked out those buyers, and then now it's coming down bearish. If it closes back below here, guess what we're going to do? That green zone is going to turn to red. It's that same point of control, but now we see some liquidity that was grabbed up there, okay? You guys understand how, like right there, if we took that buy, you know, we would be in drawdown right now. Now, if you held off from taking that buy, you should be congratulating yourself. That's a job well done. That showed restraint. That showed that you didn't bite on that, because there was a lot of biters that bid on that. And, you know, these are big volume. Maybe to you, they don't look like a lot of volume, but just how that came up right there. Let's say you bought the high of that candle. That just came down to 100 pips in drawdown. Some traders panic at 100 pips of drawdown because they're over leveraged. But you see there, what happens if we sold that impulse going down? Now you see how it returns right back up, and it's this spin top candle. So they're playing games right now. They're playing games. They're accumulating buyers. They're accumulating sellers. There's retail traders who are panicking right now because they're over leveraged, where you and I are just continuing to analyze, look for a better opportunity, okay? But in situations like this, even if you're still waiting, say congratulations to yourself. Give yourself some positive reinforcement for not going in on a buy or sell on that candle, because you would be suffering some type of drawdown. Both buyers and sellers are witnessing a little bit of drawdown, okay? And some retail traders are over leveraged, then they panic, then they get pissed off, then they revenge trade, then they get mad at the markets. And you guys know that psychological cycle. Okay, I know that very well. I've been trading for 20 plus years. I know that cycle just like most of you guys, okay? But do you see, I just said, guys, I'm still on the sideline. Why? Because we're still 10 minutes into the futures. There's no real big move going on right now. So I feel like I haven't missed out on anything. You know, when someone's screaming at me, Ron, are we buying? Are we selling? This is what I mean, guys. Understand what I'm going through. When some traders are screaming, Ron, do we buy or sell? And I'm on the sidelines, you guys got to understand why I'm on the sidelines. Some traders just like to continue to analyze. We're still in this consolidated zone. It still hasn't really done anything. There's too much whipsaw. It came up bullish. They rejected it. It was all the way down here. Then it came all the way. It's too sideways. It could open bearish and continue to go down, or it could continue to go bullish. But I'm going to continue to wait and see who accumulates more. Okay. You got you're going to have to learn how to trade this type of volume at some point. Okay. You're not going to always just be an impulse trader for the rest of your life, because it's not always going to work. The odds are stacked against you as impulse trading. Okay. So believe it or not, the probabilities are to wait for volume to close and look for retest. Yes, it takes longer to get into trades, but you have more probability of being successful because you have added confirmations, okay? I know it sucks because the market will tease you with nice candles, okay? But you have to resist that urge, believe me. I'm a 1 minute scalper. Think about what I go through every 60 seconds, okay? Think about this structure on 60 seconds. Like right there. If I sold that 1 minute candle, it just teased me, came down, and look, it's right up there. It's hitting my stop loss. Again, if I bought that breakout right there, that could have stopped me out. You know, like I'm just showing you guys. If you want to practice this, practice on the 1 minutes. Open a demo account. Don't trade your live accounts. But you'll see more candles set up. You'll see a lot of impulse candles. You'll look at confirmation candles. You'll learn what are wicks, bodies, points of control. You'll learn faster. I suggest everyone learns on the 1 minute, but in a demo account. Okay, don't do it with your real live money unless you have experience. And then slow it down, going to the 5 minutes. Slow it down further. Go it down to the 15 minutes. You can go to 30 minutes, 1 hour, okay? And then you can slow it down. You're slowing down the volatility. It's not as crazy as us 1 minute, 5 minute traders. You guys can trade go to the 1 hour, okay? And you're literally waiting every 60 minutes, okay? The same structure. These are 1 hour candles. You see that white line? I put the cut of that big bearish candle. See the buyers on the 5 minutes still have not closed above that, still acting as resistance. Sellers might step in at the futures market and push this down. Right now, you see how they're working it. They got like a ceiling above us, that lower high. That was a big bullish candle. They pushed it down, closed right there, lower high and lower high. Now it looks like sellers are going to break this thing down. This is where they could liquidate all positions going into the futures market. 5-7 more minutes to go. This is where you might see a big, huge black candle come and liquidate all of the orders. Then it picks up everything coming down here. And if futures market opens up and it's bullish going right back up, okay? But it could have come right back up to here. This is a red zone, and then it pushes it right back down, okay? Another thing that I don't like doing is trading, like getting into a trade right prior to a major session. Futures market 8 p.m. is a major session. London market 3 a.m. is a major session. Wall Street 9:30 is a major session. You guys got to understand this, okay? Because look, just go back and back test. Look at 9:30 a.m. Eastern, okay? Look at 11. That was when Trump was speaking, okay? But if you go back to look at gold right there, 9, okay? Bearish. If you waited, see that pullback? If you caught that point of control, that one closed below the structure, could have had that sell. And then 9:30 came all the way down there. Look at 9:30, and then they brought it right back up, pushed up, could have waited, bought a pullback. But then you see the pullback didn't break that resistance. Then it came right back down, okay? But right now, sellers are pushing down, okay? So this is going to close in 15 seconds. Then we have 5 more minutes, and then we're going into the futures, okay? Guys, this is what I like. I like when you're learning without, demanding whether we buy or sell. Do you guys understand that trading takes time? It takes time to learn this. You got to learn patience. Believe me, I used to be a very impulsive trader. The first year when I started trading, every single candle was a buy or sell, buy or sell, buy or sell. I was one of those guys, just buy, sell, not knowing what's going on, and I lost all of my money. I guarantee you, if that's how you're going to look to trade, I'll save you time and money. You're going to lose it all. The markets will gobble up all of your money if that's the way you want to trade. Wait for volume bars to close. Wait for confirmations. It's not the end of the world, okay? Stop giving yourself only 30 minutes or 1 hour to trade, or else, give yourself a window. If you're going to sit down for 2 or 3 hours, look for quality setups in those 2 or 3 hours. Don't say, Ron, I only have 30 minutes to trade. I have to trade every candle, because I'm going to tell you, you're going to be rushing every single trade. Then you shouldn't be trading like that. You shouldn't be trading under pressure. Okay. If you feel pressure when you're trading, you got to go back and study. I'm telling you guys the honest to God truth. Some of you guys will learn from us. Some of you guys won't. But I hope you guys will learn. We are experienced traders, okay? I'm not saying this to be cool. I'm not saying this to show off. I've been staring at candles since I was 16 years old. I'm 44 years old now. I can tell you guys the honest truth. The same candles I was looking at 16 years ago are doing the same shit today. Do the math, how many years that is, okay? For anyone saying, what strategy is this called? What's this? It's not a strategy. It's just how candles open and close and have a point of control, have a fair value area where they get rejected. See that? Now the blue candle came right up to that red box. Now it's acting as resistance and it got rejected. Okay. So it's telling me that the sellers are there. The buyers have not proved yet. Okay. Now we have 3 more minutes to go going into the futures. So right there is showing you how the black bar closed, push for a new low, close below. That blue candle came all the way up and look at right into the red box, and they're pushing it down, okay? I hope at least one person is learning on tonight's call. If one person learns something, it makes my night, okay? If I can get through to one person on this call, I've done my job. I won't be able to get through to all 300 of you guys, but hopefully I'll get through to one of you guys. Okay, now it's coming back up bullish, okay? We're 2 minutes away from futures market. What happens if we close back blue above here? We could continue to move bullish with the futures market, okay? And a reminder, guys, okay? Wednesday morning, I'm leaving for Europe for approximately 12 days, okay? I will be back Monday. What is Monday? Let me just see the date here. Monday, March 16. I'll be back. Sunday night, it's really late Sunday night on the 15th. I'll be back for St. Patrick's Day, March 16. And then we'll have one Tokyo session just so I can recover from the jet lag, and then we'll go into New York that week. And guys, then we're gonna be now getting ready for our SST stock and options boot camp. I'll have it all broken down what you get involved if you join it. I really want traders to join that if you want to learn all about stock and options, okay? Because that's where we're gonna go through a lot. Okay, when I say 5-6 days, I might even make it 2 weeks. Like it might, I don't like timelines. I like to make sure everyone understands what we're doing, okay? We have to break down everything. What is a stock? Preferred share, common shares, okay? Then once you learn that, you're gonna have to move into options. Options is a lot to digest. It's not easy, but when you figure it out, you might fall in love with options and stock trading. So you don't always have to rely on gold. You can trade physical securities like Apple, Nvidia, Tesla, gold. GLD is a gold ETF. So I'm trading that right now. I have GLD call options that I bought last week because I anticipated a war in the Middle East. They expire in 1 month, and they're up 500% right now. I can exercise them and cash them out anytime right now. I don't have to wait till expiry. And when you follow geopolitics, you guys know how we trade gold. So put that towards stock and options trading. But the only thing with stock and options, there's not many, a lot of you guys use prop firms, okay? There's not too many prop firms that do stock and options. This is literally, you have to use your own capital, your own cash, your own money, okay? Here we go. Here's the futures market. So just opened, blue, okay? See the volatility? We still have wick, okay? It's turning blue. This is new hourly. We're still below this. Lots of volatility. This is what I mean. It's the futures market open, okay? So this is a big candle coming through here. Again, I'm going to wait for this candle to close. Am I missing out on a potential sell? Am I missing out on a potential buy? Possibly, but I want to see maybe this is going to be a structural candle that can close above or below. Maybe this one I might be able to cut in half. What if the volume continues to stay in this consolidated zone? Then again, it's just trading sideways. We're in a choppy area. We're barcoding black, blue. You know, we've got sellers selling, buyers buying. Again, we're in one of those situations where it's tough to digest what direction it wants to go, okay? This is a nice bullish candle opening the futures. Could it fill at least one of these highs? Will it close above here? Maybe I'll buy a pullback off of this candle if it closes strong. At least now I see that they were selling down here, but the buyers protected it coming back up. Maybe if this bar closes strong, I'll catch a pullback buy off of this bar, okay? Okay, so they rejected it. Now I look at the wick. Like, okay, I see a wick there. It got above that one, but didn't break above that previous wick, and we're still below the hourly selling point of interest. There's a big rejection coming down now. So what happens if they reject all of this volume and then it closes black below here? Then the market might still want to push down, okay? Then we might have to entertain a sell. But still, see when it comes down, it refuels itself. It came right back down to the point of control of this candle. Right in the middle is traditionally where that point of control is. Picked up some buy orders, and then it's trying to get back up its exhausted wick, okay? There's still a lot of time left on this candle. There's 2 minutes and 40 seconds. So that's a long time. We'll determine where it closes, when it closes. If you take a buy or sell prior to closing, you don't know where it will close, okay? So that's where it could be an impulsive move. Unless you're going with what has already been built, if you feel like it's in an uptrend and you feel comfortable buying those, that's okay, as long as you're looking at some analysis back here. But if we're just looking at an individual candle, This is just representing the futures market 8 p.m. open. Okay, so now it's coming up. Will it fill that wick and create a new high? Will it close at that relative to that white line? If it does, that would be a fantastic candle to maybe cut in half and look for a pullback to buy off of it. Believe me, guys, I want to take a trade, okay? Understand, I get on these calls, I get excited. I love to live trade with you guys. I'm aggressive. I take buys and sells. But there's got to be a point in time, too, where you got to be patient, right? I know it sucks for live trading because you guys want to see action. I understand that. But I'm also a disciplined trader. I understand that sometimes you got to wait. You got to wait for a good opportunity. Takes time, right? That's why trading is difficult. It's not difficult because you can't interpret the candles. It's difficult because most of us don't have patience. Once you learn patience in trading, you're gonna start to improve your trading. Believe it or not. I know it's pretty stupid to say that. That's all it takes. If we're teaching new traders, you just got to learn patience and you're gonna make money. Yeah, that's basically it. Okay, so this is a good candle. Look, it broke its high. Okay, so that's a good candle. Okay, so you see, I'm just removing that red box because that was, for example, of that red candle. It wasn't a structural candle. Now this could be a very nice structural candle. Okay, so it's closing in 10 seconds. Okay, this is one I'm going to cut in half because I might be wanting to buy a pullback off of this bar. But notice how it's right at the highest point. It could open ignited and just start flying right now, okay? So you have to determine that whether you want to advance on a buy or wait for the pullback, okay? So this is one. Grab my Fibonacci tool, opening price, closing price. See the cut line, red line, right there? That box, okay, that previous one is right there, the point of control. I make it green. I'd like to buy if it pulls back into here. Okay, I might not get it because it's got a short wick and it opened blue and it could continue to advance and get right through there and travel up to. See there's a bearish gap from right there to there. Okay, I'll just put a red line like right in between it so we know 5370 right above that white line. Okay, so you see how it's this small doji candle. Okay, sometimes these candles tease us. They just sit here and they say, buy me, buy me, buy me, buy me. And then when we buy it, then it comes down black and tests here. And then we're scratching our head and saying, why didn't we just wait for it? So it's one of these setups. You're going to have to learn. If you're a scalper, you're going to have to learn how to accept. If you buy this doji candle, your stop loss should at least minimum be below this point of control. Why? Because let me just tell you, if you buy this right now, let's say, for example, you hit the buy button, okay? And then it does come down bearish. If it tests in here, this is where most pullback buyers are waiting, okay? So it could come in there. Yes, you are in drawdown if you buy this early candle, but when it comes in here, you want it to at least test this green box and then go back up. You don't want to panic if it comes down there, okay? Your stop loss should be at least below the zone or even below the structure here. What you got to do is measure it, okay? So measure it from there to there. So if it comes down there, you're about 60, 70, 80 pips in drawdown. Some traders can handle 80 pips of drawdown because they're trading with proper sizing. Some of you guys, when it comes down 30 pips of drawdown, you guys are panicking and you're risking your entire account, or 50 pips or 80 pips. But just like this, just me mentally saying, if I'm going to buy this candle, I'm mentally going to put my stop loss below there. I have to now factor in what size I'm using for that. Okay, so you see there was no pullback. Does that mean that I'm never going to wait for a pullback to come back down into here? That's what I mean. That was that short consolidated candle that just popped. So you had to make that decision to buy that early. You got to determine that by the wick and how small it pulled back, okay? I didn't buy this. I was explaining it. Now, it got right up to this red line. You see right up to here, there was a body and a wick. So there's a little zone right here. How do I know that there's a zone right there? Right there. You can see there's a little imbalance there, and that's what it just came into right there. If I was in this candle, I would right now be at a break even, okay? For example, if I bought that and it's breaking out and I had my stop loss down here, That's a lot of profit. I would at least be moving to a break even right now. Okay. I didn't, but measuring up to there, it's an 80, 90 pip move. Okay. Maybe you want to take out 50%, 80%. That's how you can learn how to scalp. Okay. Scalping is not, you're not taking this candle until holding it till next week. You're just taking it from one zone to the next zone. Maximum is up to this red, because that's that big block we have above us on the higher time frames. Okay. Now, I didn't take the buy. Okay. Full transparency. I admit it. But that doesn't mean that I can't wait for a pullback. What happens if it comes down here in 15 minutes from now? What happens after the call? It comes down here. Okay. Just because I'm not in a buy, there's still possibly pending orders developing in here. I'm not the only one that wants to buy a pullback. There's a lot of people that want to buy pullbacks. There's a lot of institutions that maybe want to buy a pullback. That's that smart money. Someone asked me, Ron, do you trade smart money concepts? Well, smart money is waiting in these pending zones. Smart money is not always FOMO buying the highs. Okay, smart money understands that it might need to retrace back in here. Then they get activated and they're buying the discounted pullback. Now, see how it naturally came right into that red zone? That's why I said, if I was in a buy and I'm up 80, 90 pips, I'm not pissing away a lot of my profit. I'm securing 80% because sometimes I see this where it gets a wick and it comes all the way right back down. Okay. And then if you secured a little bit of that bar, at least you got a little bit in the bank, and then you're looking for another scalp and one more, and maybe you're on your way towards hitting your daily goal. Okay. But we are still trending up. It's still technically bullish. Okay. So see, the sellers didn't really do anything below here. It retraced down. And then futures market. See, a market can change the entire momentum. And that's what it did right there. How do you guys like tonight's session so far? Okay. I know I'm talking a lot, but it's good talk. I wish someone was talking to me like this when I was learning how to trade. It would have helped me a lot. Honestly, guys, I know it's not exciting by not being in a trade. Believe me, I get upset too when I'm not in a trade. I like to make these sessions fun. I love to, when we get into a trade, hopefully we're learning and earning at the same time. But sometimes, guys, you just got to understand, like, you had to make, you as a trader, you are your own boss. You are your own executive. You have no one to, you don't have a boss, right? You can clock in and clock out in these markets anytime you want. You are your own boss. You're the employee, you're the manager, okay? You had to make an executive decision on that candle right there. When it opened up, remember that small doji candle? You had to decide, do I buy that candle and get that explosive move, or do I wait for it to pull back? How many times on these calls do I wait for at least 30 seconds? It's a doji, and I say, guys, I'm gonna pull the trigger, I'm going in a buy, and then it lasts 10 seconds, and then it's a big black candle coming all the way down. And then it comes in here, then takes me back up. So it's one of those things. It woulda, shoulda, coulda happened. Regardless, if you bought it, fantastic. Make sure you have rules. If you didn't, stick to your rules, right? It has not retraced back into this zone yet. So how can we just give up on this trade? Like, what happens if it comes down here? Okay. Don't forget that this point of control has not been contested yet. Okay. So the longer it takes to get down here, think of this. Okay. Please pay attention to this because this helps me too to stay patient. The longer it takes to get in here, the more pending buyers are accumulating in there. Do you guys understand that? So if it takes 20, 30 minutes, 1 hour before it comes in here, there will be a shit ton of pending orders waiting in here. So it's like when you're cooking a stew, you got to simmer it for a while. Once it comes in here, you might be buying with all that big volume, and you might notice that it just goes right into profit with zero drawdown. But you had to patiently wait for it to come down there, okay? That's what keeps me from, FOMO buying highs, is understanding that this zone has not been mitigated yet. The longer it takes, the more pending orders are coming in here, and I'm still waiting. Now it's a big black candle, okay? So you see how it opened? Did it advance above that red zone? No. How did I determine that red zone? Just look backwards. See the bodies, and that wick? See right there, guys. This is how you can determine all of these zones and gaps and imbalances and fills and shit like that, okay? Doesn't take any fancy strategy or nothing. It just takes you analyzing, looking backwards. That's why I always am looking backwards, right? Here's another one. If it continues to move up, look at this big bearish candle at 9 a.m. See that pull up where it came up blue? Right there. There's a wick and a wick. There's imbalance right here that's still waiting to be transacted. There's probably a shit ton of offers right in there. Okay, I can draw that going across too. If you guys don't understand what I'm doing after this call, watch this call again and see what I'm doing. And maybe you'll understand. Then I know if I'm scalping just from here to here, I measure it. So I know exactly what I'm getting. There's another 80, 90, 100 pip move. $10 move in gold, 100 pips. That's it. That's what I'm looking for as a scalper. I could be in and out and wait for another move. Okay? 100 pip here, 100 pip there. You might be on your way to 200, 300, 400. I'm seeing scalpers these days hitting 1,000 pips. Okay, I don't want to mention how many pips I got last week in one trading day because no one will believe me on here, but I scalp 1 minute candles and some 1 minute candles are 50 to 100 pips. Okay, just 10 of those a day, that could be 500 to 1,000 pips. Yes, if I do take a loss, I add those, but the net pips at the end of the session hopefully are positive. Okay, but you got to learn how to control your loss pips. When I take a loss, I'm not holding it to go down 1,000 pips and just holding and praying. If it comes down to a certain location and I don't like it, I cut it. And then again, I look for another one, okay? I have that mindset that I've developed over the years. It took me decades to learn that. So no one will change that. That's just the way how I trade. I've had to learn how to trade like that to make myself profitable. Otherwise, I'm just leaving money on the table. I add it up at the end of the week and say, what the hell? Do you know how much money I just left on the table? I could have bought my entire groceries for the month. What am I doing? All I got to do is just click a button that says close 80%. And then I got groceries for the entire month. Okay, you can pay off your bills. You can pay your mortgage with money that you're leaving on the table. Think, guys, think smart, okay? This is money you're leaving on the table. Don't be silly, okay? Now, did you guys see? We're entering another consolidated zone, okay? It's below that red zone above us and above this hourly white line, okay? So it's still bullish, okay? For me to sell, I would be fighting this trend, okay? There's nothing suggesting to sell. It's still bullish. The only thing I'm looking for is to buy pullbacks. I'm looking to buy this green zone. It has not retraced back down in here, unfortunately. But I hope it does on this call because I only got like 15 more minutes to go. But if it doesn't, I have an alert there. See how I have an alert at that zone? Okay. I also have an alert down here. So regardless, tonight, if gold pulls back at some point tonight here, I may possibly look to buy that. Okay. If it comes down further, that would be a better buy. Why? Because you're buying deeper into this zone. But this could be the first retest where it was resistance there. Volume futures market opened above, might want to come back down and retest this and just naturally wait there for a buy, okay? If you want to test it with like a pending order with a micro size, something that, or open up a demo account, okay? Open up a demo account if you're learning, okay? Please listen to me. There's no emotions involved. Just test strategies. With a demo account, open it, put a pending order here and a pending order here and see how it plays out and learn from it, okay? And then once you start getting better at this, then go back to your live account and trade with proper risk management. Guys, awesome. Hit the subscribe button. We got a lot of new snipers here. Thank you, guys. Let's take a look, guys. Okay, so we got gold set up here with in our signals. Okay, so Dave took a buy at 5346. 5346. Those wicks below there, Awesome buy. They bought the bottom, took it right up to 70. Okay. See, a 0.1, not bad. $1 per pip can yield you 234 US dollars. Okay. That can pay for a lot of things, right? You don't have to trade with excessive sizing. If you can do a 0.1, you let it play out. Right now, there's big volume in most securities. You could make a shit ton of pips these days, okay? There's big volume in these candles. Excellent. Oil, guys, too. Oil. Keep an eye on oil, okay? This is the US oil chart, trade signal setup. Geraldo, you're learning patience, my man. It takes, Geraldo, it takes some people years to learn patience. Some will learn it, some will not, unfortunately, okay? Some will learn it too late. You know, the guys, real facts. Some people will learn patience after they lose all their money, okay? If you still have capital and you still have money in your pocket, now is the time to learn patience. Bern, it took you 4 years. 4 years is pretty good. Some traders, they're 10 years in and they still haven't learned patience, okay? But please, guys, strive to learn patience, okay? You still see I'm waiting for a pullback here. I know it seems tempting to just continue to buy the highs, but that's not how you want to trade, okay? You don't, because that's that. What do we always say? You don't want to FOMO, fear of missing out, right? All FOMO traders want to buy these highs because they think gold is going to continue to run up without them. That's fine. If you do that, that's fine. But in the long run, you will not win. You won't have a high probability of success if you continue to trade like that. Yes, you might buy this candle and the market will reward you, but for you to think that you're going to do this every single day, it doesn't work. It doesn't. Believe me, I backtested this live with my own account for you guys, and I lost $50,000 when I started. Lots, okay? Gone with the wind. You know, 50 G's when you're a young kid is everything you have. Basically, I pissed away my university tuition money. I didn't tell my dad that, but I worked all those years to pay that back so he wouldn't kick my ass if he ever found out about that. But I paid it back and I'm ahead of the game. It took me a long time to do that, but I learned my lessons. Don't piss away your university tuition money on trading. When you're trading on impulse, you're trading with no risk management and you're gambling. Okay? Not the way to do this. Even a little pullback buy to this white line, because now remember that was hourly resistance, volume above, it can turn to hourly support. We also have confluence at our 9 EMA is there. So even a shallow pullback, even if we get a black candle coming down there, that might be an opportunity to look to take it back up. If it doesn't hold there, that's the better. We're buying at the block of 8 a.m. That was the futures market 5-minute candle. Still has not been tested. So it's an uncontested point of control. I know we're missing out on a bullish run-up, but sometimes when you're waiting, you're going to miss out, okay? I don't know how else to say it. If you guys don't understand this, then you got a lot to learn in trading, okay? Do I feel bad not taking a buy? Yes, I do. But I told you from the start, I was waiting for a pullback. I told you we had to make that decision on that one doji candle and go in with that, okay? If you didn't, it's not the end of the world. Just continue to wait it out, okay? You don't have to sit and stare at the computer after this. Set an alert like me. I'm not going to be sitting at this computer staring for a pullback. I'm going to go do my things that I got to do. I'm going to go in my garage and go for a workout. I have my alert set up. I'll have my phone beside me. I have a monitor in the garage. I'll have it there. And if it eventually comes down there, it will go ding, 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 give me an alert. I don't just buy blind. I watch to see. Maybe it breaks and then gets a wick, comes back. That's good enough evidence to buy that. Then I get back in the buy, okay? That's the beauty of trading today's technology. Add alerts, walk away, and let the volume come to you naturally, okay? Sometimes when you're sitting staring, you're going to force yourself to take shitty trades or trade on impulse or just trade on FOMO. Sometimes when you walk away, it's the best thing you can do in trading. Believe it or not, guys, it's the best thing you can do, because then you can let the market eventually pull back naturally without watching it. And then when it comes down there, you get an alert. Okay. Sean, nice one, buddy. Wow. From 5321 to 5376. Holy shit, bud. $55 move in gold. That's 550 pips, man. See what I mean? Like, with today's market trading gold, it's unbelievable. Like 550 pips is a lot of pips. Good job, man. And tomorrow, guys, okay, so if you want to join Dave, don't miss out. Dave is doing COMEX Market, the Wall Street, Tuesday, Wednesday, Thursday with the snipers. Dave is breaking down the analysis with the team. It's private. Join. I'll be back tomorrow, same time. Let's start maybe 6:45, 7 p.m. tomorrow, okay? And we'll run it till 8:39. Tokyo session again, and then I'll upload a mindset psychology webinar for you guys Wednesday morning. I'm taking off to Europe, guys. I will be gone until the 16th. Okay. For everyone in Zoom, I will be active in the Discord. I'll be active in the Discord with you guys while I'm down there. I'll take my laptop. I'll see if I can do some streaming with you guys. However, I'll be in the Discord. And if you want to join the team, guys, we'd love to have you guys in the Discord with Dave. There is 50% off promos. All memberships are cut in half, 3-month, yearly, lifetime. We want you guys to learn and earn with us. There's a shit ton of education. Okay. So this is that mindset. I'm going to do a 25-part series. I'm going to pump these out very, very soon. Intro to trading psychology, understanding the role of emotions in trading, developing emotional intelligence in trading. This was a good one I did last week, the growth mindset in trading. Okay. Change your mindset, guys, from a fixed to a growth mindset. Okay. Like this session, I look at it as a positive session, meaning we didn't make any money, right? I didn't make any money. Maybe you guys did. I didn't make any money, but still we learned something. Okay. Anytime I'm learning something, I take the positives away from it. That keeps me continuing to learn. Okay. Another thing is, did this bullish volume close above that previous red zone? Yes. So currently this is a green zone now. So any pullbacks could be identifying this as a shallow pullback to buy at 5370. This strengthens this one down here stronger. This is the strongest one. You notice how we're just diverging away from it, okay? So it's very bullish right now, but there's going to be sometime tonight, there's going to be a corrective phase. There's going to be a pullback, okay? How do I know this? Because I know these things. The price doesn't just go up forever, okay? If there was no real news that was announced, it will correct itself. It might take time, but when it does, it might come down here and bounce back up, okay? Remember, the better buy, the deeper discounted area. Don't forget that 8 p.m., this big bullish candle, has been uncontested so far. It's 8:26 for 26 minutes. That point of control is still uncontested. That doesn't mean it's just sitting empty with no pending orders. There's a shit ton of pending orders in there, okay? So I'm going to wait for this move to come down tonight, and maybe I'll be looking for potential buy. And then maybe I'm looking for that bounce out of there, okay? I'm not going to be risking my entire account on it, but I'll be risking 0.25% of my 1% of my daily trading percentage. If I get stopped out, okay, it's not the end of the world. I lose 0.25%. I can bounce back and try and make that up on the next trade, okay? But right now it is bullish. If you're looking to sell, you see there were short-lived sells. They didn't do much. The bullish move is still moving, okay? Guys, yeah, the free Telegram link is pinned at the top of YouTube for you guys, okay? What is this? To be honest, I'm only here to learn. I don't care about the money when you're explaining. Nice, okay? Been trading for a few months now, and I have to say your tips have been very valuable. Good, good, as long as someone's learning. Primal Light and Avi 5805. Good. I hope everyone is learning on YouTube and in Zoom, and just continue, guys. I promise you, when you learn patience, it will make trading that much easier. Understand that sometimes if you miss out on a trade, it's not time to panic. It's not time to FOMO trade. It's time to just continue to analyze, mark up some specific structural areas, and allow the market come to you. How many traders say you get paid by being patient? I've never heard of getting paid by being impatient. Okay, when you're impatient, you're going to lose majority of your accounts and money. Be patient. Okay, it has not pulled back yet. Okay, I'm trying to make that clear to everybody. Believe me, I was trying to buy this pullback from the start of the futures. It has not. So that doesn't mean that there's no pending orders in there. If they're accumulating, there's probably more and more and more building. So when it eventually comes down there, it could come down, get a wick, pick up all those, and move straight into profit. Okay, so let's monitor that. Let's look at that, and then we'll review it tomorrow. Right at the start of tomorrow's call, we'll see what was the best pullback, where did it happen. We'll back test together, and then we'll get right back into live trading tomorrow. Okay. Ariel, there's a $1 to $2 million buy limit order in there. Yeah, if you have depth of market, you could you see the order book. So wouldn't you want to be part of that $1 to $2 million buy limit? Like, instead of just focusing, just buying these highs on thin volume, if you look at nodes on your volume profile, this is sometimes where it thins out with volume. And then that's where the big volume node is, right in there, waiting to come back in there. But yes, if you're looking at the order book, that can maybe give you a better vision visually of where the bigger orders are waiting. So that's excellent. That's how you can use order flow as confluence to what I'm trying to explain here. And maybe when you see it visually with a big order sitting in there, that might make you understand why it's best to wait for a pullback in there, because you could be buying with that majority delta positive volume, waiting to buy the pullback. So excellent observation. That's good. Good job, Ariel. Okay, guys, that's it for me. I got to go help my son with a math test he has tomorrow. And Dave will be live New York tomorrow. So join the team, stocksnipertrading.com. There's 50% off on everything. And also tomorrow, guys, we'll be back same time, 6:45, 7 p.m. Join us, and we'll see how the markets are moving tomorrow. Okay, just be careful trading this entire week. Anything can happen in the Middle East. On every single candle could be chaos. Okay, there's missiles flying as we're speaking. There's war going on. We have NFP Friday. Please be careful. Don't piss away your profits. Don't trade with reckless risk management, because we don't want you guys blowing up accounts. Please, I don't care if you're trading your own money, if you're trading a prop firm, or if you're trading a demo account. Do not blow up your accounts. Don't do this. There should be no trader on Zoom or YouTube blowing up accounts. If you are, I don't know what to explain even what you're doing, okay? No one should be blowing up an account. How do you risk 100% of your entire account or capital on a trade? Is just mind-boggling. Lower that risk down, guys. Then when you go into drawdown, you can actually watch and analyze what's going on without panicking, okay? And then you might be able to cut trades that go against you and look for another trade and then make it back easier, okay? When you put yourself in a hole, it's like digging a grave. You're just going to dig the hole deeper and deeper and deeper. You're going to die, and it's hard to crawl out of that hole. So please trade with proper risk management. Wait for pullbacks. Now it's coming down. Now it's going to test this location. Okay. Remember, it's best to look in this location. However, that could be just where it comes down, goes back up, maybe a double top, coming down, break, and then we'll come down in here. And that's naturally where I'm looking to buy tonight. Okay. Guys, I had a good call. Thank you guys very much. I hope everyone had a great weekend. Let's have a great month. It's the start of March, everyone. Let's have a good month going forward. And happy Ramadan to those that are still fasting. Right now, hopefully you broke your fast. You're enjoying some liquids and some food right now. And we will see you guys tomorrow night. Have a good night. Samuel, Justin, Iraldo, SSDN, Rob, thank you guys. Sergio, nice. You're in on a contract from 40. Hey, it's all good, man. Get those pips and dip out of there. Good job, guys. And everyone on YouTube, thank you guys for not spamming the chat today. I really do appreciate you guys on YouTube. Today, you guys were dialed in. It makes for a better session with me and better flow. So thank you guys. I appreciate everyone tonight, okay? God bless everyone. We'll see you guys tomorrow, okay? Have a good evening, everyone. Thank you guys so much. Patience, 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 okay? Patience pays the bills. Be patient, my friends. Let the trade come to you naturally, okay? Find like you're forcing the trade, then you're not waiting patiently, okay? So just wait and allow the trade, okay? Have a good night, everyone. We'll see you guys tomorrow.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.